Everyone thinks you need $50,000 to start real estate investing, but I'm about to show you 5 ways to get started with just $1,000. Here's the truth. Real estate has created more millionaires than any other investment. But it's not just for the rich. And no, these are not get-rich-quick schemes. These are legitimate, beginner-friendly strategies that work in 2025. By the end of this video, you'll know exactly which option fits your situation and how to take action without wasting time or money. Let's get started. Why real estate? Real estate offers what most investments don't: cash flow, appreciation, tax benefits, leverage, and control. It's one of the few asset classes that can create both income and long-term wealth. When you buy a property, rent it out, and let someone else pay off the mortgage, you're building equity month after month. Combine that with rising property values and tax breaks, and you've got a wealth-building machine. So why do most people think they need tens of thousands to begin? Let's bust the $1,000 myth. People assume you need a 20% down payment, plus closing costs, repairs, and reserves. That's true if you're buying a traditional rental home on your own, but there are other smarter ways to get started with less and still reap the rewards. Now let's break down 5 powerful strategies that let you invest in real estate starting with $1,000 or less. Strategy 1. REITs or real estate investment trusts. Think of them like mutual funds for real estate. You're buying shares in companies that own or finance income-producing real estate. This could be apartments, shopping centers, or even mortgages. There are 3 main types: equity REITs, mortgage REITs, and hybrid REITs. You can buy them through platforms like Fidelity, Schwab, or even Robinhood. Pros: they're liquid, diversified, and pay regular dividends. You don't have to deal with tenants, toilets, or taxes. Cons: you have no control over the properties, and the value can fluctuate with the stock market. Expected returns around 8 to 12% annually. Quick question: have you ever invested in REITs before? Comment yes or no below. That's strategy 1. Let's move on. Strategy 2. Real estate crowdfunding platforms. These let you pool money with other investors to fund larger real estate deals like apartment buildings or commercial projects. Platforms like Fundrise, Realty Mogul, and Yield Street offer access for as little as $500 to $1,000. You get professional management and access to deals normally reserved for institutional investors. Pros: higher potential returns, hands-off investing, and a low barrier to entry. Cons: these investments are illiquid, meaning your money is locked in for several years, and you rely heavily on the platform's performance. Expected returns 8 to 15% annually. That's strategy 2 down, 3 more game changers coming. Which of these first 2 sounds more like your style? Stock-like REITs or project-based crowdfunding? Drop your answer in the comments. Now, strategy 3, house hacking. This is where things get creative. You buy a multi-unit property, live in one unit, and rent out the others. Or you rent out a spare room or finished basement in a single-family home. Here's where the $1,000 comes in. It's not your down payment, it's your education budget. Use it to learn how FHA loans work, how to analyze deals, and how to negotiate. With FHA loans, you can put down as little as 3.5%, and you can even use rental income to qualify. You can also explore seller financing, partnerships, or down payment assistance programs to reduce your upfront cost. Pros: you live for cheap or even free while building equity. Cons: you become a landlord, which comes with responsibilities, and you have to buy in the right location. Expected returns often 15 to 25% annually, thanks to rent savings and property appreciation. If house hacking sounds appealing, type live for free in the comments. I want to see how many of you are ready for this strategy. Strategy 4, wholesaling. Wholesaling is real estate matchmaking. You find a discounted property, get it under contract, and assign that contract to an investor for a fee. You don't buy the property. You don't fix it up. You flip the contract. Startup cost anywhere from $0 to $1,000 for marketing tools, skip tracing, or mentorship. What you need is hustle, local market knowledge, and people skills. Pros: you don't need money or credit to do deals. You can make fast cash. Cons: it takes serious effort, networking, and consistency. It's not passive. Expected income: $5,000 to $15,000 per deal. But here's what most gurus won't tell you. Wholesaling is a full-time job. It's a business, not an investment. So be clear on your goals before diving in. That's strategy 4. One more to go. Strategy 5, real estate note investing. This one's for those who want to become the bank. You buy mortgage notes. These are the legal IOUs from borrowers. You collect payments, or in some cases you may foreclose and take ownership. You can find these through note investing platforms, auctions, or note brokers. Minimums vary, but some deals start around $1,000. Pros: passive income secured by real estate. Cons: it's complex and requires deep understanding of legal processes, especially if the borrower stops paying. Expected returns: 12 to 20% annually. Beginner tip: start with performing notes, meaning the borrower is already paying on time. It's less risky. That's all 5 strategies. Now, which one is right for you? Here's a quick decision framework. If you want passive investing with low time commitment, go with REITs or crowdfunding. If you want to live in your investment and reduce your housing cost, consider house hacking. If you're willing to hustle and build a business, wholesaling might be your path. If you prefer paper assets and steady income, look into note investing, but educate yourself first. Now let's talk about common beginner mistakes. 1. Skipping education. Learn first, invest second. 2. Ignoring your local market. Real estate is hyperlocal. What works in one city might flop in another. 3. Over-leveraging. Just because a bank offers you credit doesn't mean you should take it. 4. Falling for hype. If someone promises guaranteed returns, it's a red flag. And 5. Forgetting your emergency fund. Don't invest your last dollar in any strategy. So what should you do next? Here's your 90-day action plan. Week 1. Choose one strategy that fits your budget, time, and interest. Week 2 through 4. Dive deep into education. Use BiggerPockets, YouTube, or local real estate groups. Month 2. Run practice analyses. Use property calculators. Compare markets. Run numbers. Month 3. Build your team. Talk to lenders, realtors, attorneys, and other investors. If you're going with REITs or crowdfunding, open an account and start with $100 to $500 just to learn. If you're going the active route like wholesaling or house hacking, take your first step, send mailers, book showings, or find a mentor. You don't need $50,000. You need knowledge, action, and a plan. Important disclaimer: real estate investing involves risk. Market conditions vary. Local laws and taxes apply. This is for education, not financial advice. Do your own due diligence. Thanks for watching the Wealth and Wisdom Academy. Bookmark this video. Share it with someone who thinks real estate is out of reach. And tell me in the comments, which of these 5 strategies are you most excited about?